Hello guys, hope you're doing good. I took a long break from creating videos, and the real reason is I was damn lazy. So if you're new to this channel, in this channel we discuss stocks, real estate and crypto. So let's get into the topic. In this video, I like to talk about how to evaluate stocks based on PE ratio, that's the price to earnings ratio. If you're interested in buying a stock, let's say Bank of Nova Scotia, and the stock price is $76, and then you see there's another stock called TD Bank and the stock price is $84. So now you have two stocks. The Scotia Bank is sitting at 76 and the TD is sitting at 84. Which one is a better deal? At first look, Bank of Nova Scotia seems to be cheaper than TD. But can we compare two companies based on the stock price? Absolutely not. There are quite a few metrics that can help you to compare two companies, and PE ratio is one of them. First of all, what is PE ratio? It's called price to earnings ratio. The ratio can help you to understand price of a stock relative to the company's earnings. In simpler words, it can help you to understand the stock price based on the money the company is making. So if you buy a stock and the company is merely making a profit, you will be able to find out. So the next question is, how do we find out the PE ratio? In order to find the PE ratio, we need to find the EPS. Don't worry, it simply means earnings per share. So when the profits are divided among the shareholders, how much of that goes to one single share? To find out, just divide the earnings by the number of shares issued by the company. So now we have earnings per share, and if you don't want to do that, just go to Yahoo Finance and look at the EPS. It's that easy. Now we have the earnings earned by one share, that's the EPS. To find out the PE ratio, just divide by the stock price. In the case of Bank of Nova Scotia, that is $76. So $76 divided by the earnings per share, EPS. Now we will get the PE ratio. It's as simple as that. Now let's look at the PE ratio of Bank of Nova Scotia and TD. The PE ratio of Bank of Nova Scotia is 9.22 and the PE ratio of TD Bank is 10.48. The lower PE ratio indicates the Bank of Nova Scotia is relatively cheaper compared to TD based on its last 12 months earnings. Now I want to tell you something very important. Each sector has its range of PE ratios. So if you compare Google's PE ratio with Bank of Nova Scotia, you will see Google will have a higher PE ratio because it's in the technology sector. So when you make each comparison, try to compare companies in the same industry or the same sector. And keep in mind that PE ratio only compares two companies based on earnings and stock price. There are a lot of other useful ratios, and if you would like to know more about these ratios, comment below. Thanks for watching. See you in the next